Sensex at 50,000. The party on the street and investors are worried what to do with the markets. Should I book some of the profits? Should I sit on cash? Well, in today's video, we'll be covering from our previous video on Nifty, a short-term top where we have received a huge positive feedbacks and somewhere asking to come up a video for investors. So in today's video, I will be discussing Sensex for investors. Myself, Brijesh Bhatia, senior research analyst and editor at Equity Master. So if you look at the Sensex right from 2000, we have seen a stellar performance from the markets. We are very far ahead, right from 10,000, 20,000, 30,000, 40,000, 50,000. The milestones are going on, and the cake cutting ceremony goes on. Now, foreign investors, I think there is a huge potential for markets to go up from current trend as well. And it's not the biased decision which I'm making, looking at the markets which are roaring at the new highs every day. But I would like to share one chart with you which will keep as an investor for you to hold your positions till you don't find a conclusive, I would say, the charts which give the signal of exiting some portfolios and sitting on cash. So let's look at this Sensex chart right from 2005. So I've just taken nearly 1.5 decade of data for you. So if you look at the monthly chart, and this is the Heikin-Ashi chart, and many of them have asked the questions that where do I find the chart? So you can just write down the website www.tradingview.com. You can go on to the Indian websites investing.com, www.investing.com. Both these websites or these are the free websites which can give you such kind of charts. Just go on to the Sensex, Nifty or any stocks you want to find out about the code, and the chart will be in front of you. Yeah, coming on to this chart again. Now, if you look at 2005 to 2008 and how to read this chart, if you look at the every blue candle is the bullish, every red candle is the bearish. And there are three types of Heikin-Ashi candle you should look at. First is bullish when your open and low are same. The bearish when your open and high are same. And third is the doji, which are slightly indecisive in nature. So let's look at 2005 to 2008 markets were consistently forming a bullish scenario. None of the monthly candle were bearish, and we have seen right from 2005 to 2008 in a 3 years Sensex has been gained around 300%. As an investor, should you be worried the market has doubled in a 1 year's time frame, in a 2 years time frame, in a 1.5 year time frame, and I should book the profits? I would say no. Till there is a confirmation of markets turning their tides, I think you should hold your positions or your stocks which is showing a sign of turning the tide on monthly chart, then you should look for profits. As of now, for 2005 to 2008, 300%, and if you look at the 2008 to 2009 where market have given an early indication. And how am I taking the confirmation? If you look at the first bearish candle, when the lows are broken of that bearish monthly candle, I'm considering that the bearish trend has started. I repeat it. When the first bearish candle you see where your open and high equal to same, and that monthly candle the low is broken, I'm taking it as a trend has changed on monthly candles, and I'll turn from longs to short. You can do either book 30% or 50% and sit on cash, then look for fresh entry when the markets turn the tide on the bullish side again. Similarly, the bullish turns out when you find a bullish candle and the high is crossed, I'll enter a trade. Now, coming on to 2008 to 2009 where market has seen 50% dip, and I'm again taking a close on Heikin-Ashi base, not a whole move from highs to lows. Again, 2009 market have turned to the positive side, and until 2011 we have seen an amazing return of 100%. Similarly, on the same lines of analysis, now from 2017 this bullish trend has started. We have seen 2020 due to COVID fall, market have seen a correction of 25-30% or probably more than that. But if you look at that monthly candle, the low is not breached, which means that as per the rule, for me, the bullish trend is still intact. And from those lows, from March lows, we are back by around 100%. So if I just look at the 2017, where it was around, I guess, 27,000 Sensex, back to the 2021, we are at around 51,000 now. So amazing 93% return. So as an investor, when till the time you don't see a bearish Akanashi candle breaking the lows, ride the waves. Hold on to your positions. And many of them ask for what to look for as an investor. I think this is the good strategy till you don't find markets turning their tide. I think you should not preempt or be biased that market have run us so much, I should be on cash. For me, till markets are turning the tide, I will continue to hold my positions. Yes, depending upon the stock to stock, you can look at out. But for me as a portfolio, I'll be on a higher side on the equity rather than cash till the tides are turning. Once the tides are turning, I will trim down my positions. And similarly, we have seen a couple of times a market have corrected 15%, consolidated, and again the fresh trend has started. Previously in 2008, we have seen 50% fall, but overall, till the tides are turning, I will hold on to my positions. And I am glad that people are liking our videos and commenting. And from that comment or from a request of our subscribers, we are coming up with this video on Sensex foreign investors. That's all. Signing off. Before signing off, I would request, do comment. We might come up with one of the videos from your comments, and do subscribe to our YouTube channel. Click on the bell icon so that you receive the notifications as soon as we release the videos. Signing off, Brijesh Bhatia. Thank you. Do not forget to subscribe to my email newsletters, Fast Profits Daily, and get a free guide on how to trade markets like pro. Thank you.